What's going on, everybody? It's Matt, aka the Lumberjack Landlord. We have a special guest. You know that I always look for amazing guests for you guys, but no pretenders, only the real deal. Only elite is allowed on this channel. So let's welcome Todd Sachs from Sachs Realty. Todd, thank you so much for making yourself available for today.
Thanks, Matt. I appreciate it, man. Happy to be on your show.
We're always looking for elite guys. So Todd's been around for a real long time. Made it through the Great Recession, made it through the last, crazy 3 years. Owns a really successful brokerage there in the Maryland area. Super awesome to have him on the channel. So what I really wanted to kind of cover with you today was really talking about not only your journey as a broker, but also your journey as an investor. Because as you know, only about 10% of real estate agents and brokers are also investors, which blows my mind, by the way. You're seeing this stuff every day. How can you not see a great deal and be like, I got to get in on that thing? I get all, whizzy up about it when I'm sitting there watching stuff on MLS. I'm like, I got to get in that thing. And so for you to be on that front line where you see that thing hit the tape, it's one of those things that just kind of gets me going. So what I wanted to have you do, Todd, was just introduce yourself to my audience and have you take us through kind of who you are and what you do.
Hey, man. So Todd Sachs, I'm the broker here at Sachs Realty. We are a Maryland real estate brokerage. Matt, we serve both residential and commercial clients. And I started out, it's kind of, you hit on, there's a lot to unpack with just what you said, I started out in 1989 swinging a hammer. That is a long time ago. So I've been serving the real estate industry in one aspect or another as a contractor, as an investor, as a salesperson, a real estate salesperson or a realtor, and then now as a real estate broker. So, it's kind of interesting. There aren't a whole lot of brokers that have, taken houses down or brought them out of the ground. And, so I'm kind of unique in that regard. But, it is true. A lot of real estate agents, they don't own properties. They're not homeowners themselves. And maybe that's because they just started out, they're young, but they haven't yet invested in their primary residence, let alone a rental property. And I kind of say it's almost like, going in to buy a Mercedes Benz. If the salesperson's driving a Honda telling you that you should be driving a Mercedes Benz, you may kind of eyeball that, person a little bit and go, you might question. So when I get investors that are coming to me and, I'm able to actually tell them from the aspect of being an investor myself. But I do want to also mention that, sometimes people say, well, why do I want to use you to help me if I'm an investor? Because wouldn't you just buy it yourself? Guys, you don't want to think that way, right? I could buy every house myself if I could afford to do it, but nor do I want to, and I can't afford to. But, you really want to make sure that you're dealing, if you're wanting to get into real estate, that you're dealing with someone that has done it. They have landlorded, they have invested or flipped. If that's what you're looking to do, you want help from that type of agent.
Yeah, I think that's invaluable information that a lot of people just don't get. I had this one agent that every single time she called me, she told me what a good deal it was. I said, show me. Yeah. She goes, yeah, we can set up a showing. No. Show me why it's such a good deal.
100%.
She couldn't show me. She could never show me. I said, you can say it's a good deal, but you have to show me why it's a good deal. And so it was one of those interesting things that I always push people and say, your comparison to a Mercedes-Benz when they're driving a Civic, I completely agree with. How would you really know? And I want to deal with people that really know. We don't give advice. We only share our journey. So when somebody asks me about a 1031 exchange, I can tell you what I did for a 1031. But it's really those kind of concepts that are really the base building blocks, which is we really want people to be working with people that are in the game and done it before, because it's that knowledge that saves you major missteps and extremely expensive lessons. So when did you actually start investing? I know that you were kind of starting to get into the real estate side of things in '89 when you were swinging the hammer, but when did you actually start investing in properties?
So, I actually started investing in about 94.
Okay.
So I was working in the business before, I started to flip. And, You know, it was interesting because this is way before I ever became a licensed real estate agent. In fact, Matt, the only reason at the time that I got my license was because I was so frustrated with real estate agents. And you just mentioned, a big part. They would call up and say, hey, I got this great deal for you. I have this flip for you. I have this rental for you. Or, this area is really coming up. And, and they didn't understand what was involved. They didn't understand that there was permitting. They didn't understand that maybe there was engineering or, architectural drawings that needed to be done. They didn't know any of those costs. And I'm certainly not blaming them for it, but it was very frustrating. They didn't understand the numbers, the return, the rents, and they didn't understand what the property could rent for and what the overall investment would be required to actually get that kind of money. And once you show it to them, they were like, oh yeah, that doesn't make sense, right? Most of them. So they really didn't know how to search for the deals. And the other thing is I was frustrated that the agents didn't want to, they considered it wasting their time, right? Because they're trying to help me find a deal, which meant that I wasn't buying every house that they were showing me. Maybe they were showing me 10, 15, 20 houses. And there was such a disconnect that I just said, you know what, I'm going to get my own license. But to answer your question, I started right about 1993, started out doing, rehabbing, and because I had the means to do it. I mean, I already had employees at that point that were, in construction, and, we just kind of dove in and went for it.
What kind of assets were you investing? Were you investing in single families, 2s, 3s, and 4s, other commercial stuff? What were the type of the investments that you were looking at doing and doing the work on?
Yeah, so I was looking at single family houses. So, I know you invest in a lot of multifamily, and, I love multifamily, but I have my opinions on those are, if you buy a multifamily dwelling, house, the idea is to keep that property forever. Yes. Because the only one that's going to buy it from you is another investor, and they're not going to want you to have a profit. So if you're going to sell that to, multi 3 or 4 unit building, an investor's probably going to buy that, and they want to buy it as cheap as they possibly can, or they're purely buying it on cash flow. Mm-hmm. So, I started out with single family houses because I knew it was worth more vacant than it was worth full. So if I had a single family house, it became vacant, I could always unload that. It was a lot more liquid to me than having a triplex or a quad. But then I got into doing multifamily. So I was buying multifamily duplexes. I was helping people do that too, where we were going in, making sure that the zoning would allow for another unit in a single family house. We were adding them. We have here in Maryland, split foyers, a very popular older 70s, 80s style house where you basically walk in the front. You can go up the steps to one part of the house, down the steps for another part of the house. We were basically creating vestibules or foyers in there and then making an upper and a lower apartment. And that kind of was my trend. And until recently, and to be honest with you, I liquidated most of my portfolio here in the last 12 months because the market was just so ridiculously high that investors gave me stupid money basically to get out.
Yeah. One of the things that we always say on our channel is I am more than happy to allow you to overpay for one of my assets. And so for us, we were looking at kind of a longer term strategy where it's like we expect that we're going to be landlording for another 20, 25 years. And so from our perspective, even with the crazy money, we said, well, then what do we do with that? We don't really have a place that we're going to put it. We're not looking at, getting into a new venture. For us, it was, let's just keep the path going. And somebody says, well, how big do you want to get? My answer always is, I have no idea. We're going to still keep on doing great deals. And so long as we're able to be effective in our market with our assets, we'll continue to do that. So I think the knowledge that you share is really important because you didn't hold on to an asset even when it was frothy McFrotherton and the number was absolutely crazy. And I think when somebody offers you a crazy number, I think you owe it to yourself to at least evaluate what that really means to you, to your future, and to your business. Because likely what you're seeing now, those numbers I think are going to start to come down.
Now, we'll add too, you had mentioned 1031.
Yeah.
So, when you have a multifamily or any kind of investment, I mean, ideally you want to 1031 until forever, right? I mean, you want to try, that's the strategy because, the IRS code allows for it. And, so long as, you're at least buying the price that you sold, right? And there are some laws to it. I'm not a 1031 expert. Sure. You can take some cash out and pay partial taxes and stuff like that. But, the key is there. You need an intermediary, somebody to give you, good advice. But I couldn't find, when I happened to, liquidate assets last year, I could not find properties because I'm a capitalist, right? I'm looking for deals. Sure. And I found myself, Matt, so stressed out, man, that I could not meet the deadlines of the 1031 that finally, I have a good friend of mine that invests a lot in real estate. He does way more than I do, has way more, money and everything. I called him up one day and I said, "Hey, Steve, man, I'm really stressed out. Like I'm going to have a big tax liability here. And, I need to find a 1031. And he said, "Man, I'm in the same exact spot." He said, "You know what? I just decided I was going to eat it and pay my taxes." And I went, "Oh, thank God, man. Some sanity," right? I'm like freaking out. And so I called the intermediary up and I said, "Put my money back in my account. I'm not 1031, exchanging this. And I'm just going to pay my dues. I'm going to pay my taxes," which isn't a bad thing either, because if you're paying taxes, you made money, you made profit. And I think that's only right. But yeah, so I was unable to do it last year.
Yeah, it was tough. We did a couple 1031s last year. One of the things that I started to find was they had a concept of something called a reverse 1031, which was a pretty cool idea. It was basically you hire the 1031 firm. They basically you work for an LLC, create the LLC, right. Then they buy that property, they manage it. And then as you sell your assets, they basically go in to pay towards that asset. Right. So I thought that was a pretty elaborate strategy, but certainly something I would never do without a 1031 specialist that knows right. exactly what they're doing.
Yeah, no doubt.
Would you do a deal? So it sounds like with a 1031, you were actually looking for a deal. Would you still do a deal with 7%, 8% interest rates like what us investors are getting today?
Oh, yeah. I think, like you have always said, it's all about your return on your cash, right? So what I like now that I kind of have an appetite for is more industrial assets. Okay. I'm swaying out of diverting out of multifamily or residential rentals to go more into the commercial side of things. Number one, I like it. It's less emotional. I find that, I love people and I have a big heart. And, I find that when people come to me with their problems, I end up, it's very tough for me. It's very difficult to evict somebody, put somebody on the street. Fortunately, I haven't had to do very much of that. But I like the aspect of, contractor yards. It's my favorite. Industrial properties, flex space, things like that. So I'm kind of moving in that direction. And I think that, it's not an easy game to be in. But I think that, for me, I'm focusing on more smaller sites that the big players aren't interested in, sure. And the banks will have an appetite for. And then, you just have to go in and get the best deal you can. You have to shop the banks. You're going to need to put a lot more cash down, 25, 30% a lot of times when you're buying these types of assets where you don't always need that, getting into housing. But that's where I'm transitioning. So yes, I would buy it as long as the numbers work, but you have to be very careful. I see so many guys, I help them. And, on the residential side, these get rich quick, courses that they pay for, the books that they pay for, buy houses with other people's monies. Guys, this can happen, okay? Mm-hmm. But it's not the norm. And, so many people got into wholesaling and spent all their money sending postcards out and never sold a house or never sold a contract of a house. So, be mindful to these schemes. And though that you can make anything work if you're committed to do it. But the key here when you're diving into the real estate industry is you need cash, you need money, if anything at all happens, you can get sucked right down the tubes and lose everything.
Yeah, I think that's the thing. One of the things that we always talk a lot about is BRRRR strategies, the buy, renovate, then refi, or rent and then refi it. I think that strategy is an advanced strategy that is sold to newbies with none of the things that are needed to make that strategy successful. And so the biggest concern I have in this market is the people that have gone down that BRRRR path. And I think they're going to get absolutely clobbered in a lot of cases, because if they were, a lot of times for that newbie, that project will take 6 months, 7 months. Where were rates 7 months ago? 7 months ago, rates were still in the 3s, and now they're in the 7s. And the question is that house worth the same? Has it gone up? Has it maybe gone down? Will it sit on the market longer? What's your exit? Usually with a lot of those BRRRR guys, they are almost always 99.9% of the time, they're over budget on their first one because things came up that they didn't budget for, that they didn't know, because it's impossible to know. And that's why it's an advanced strategy that really elite guys do. Have you seen that? Is that a concern that you would share since you're on the broker side and seeing what people are buying?
100%. I mean, Matt, what I'm seeing is that, they're taking their equity out, right? So, I mean, when I buy something, I want equity, no matter how I get it. There's two ways to get equity, right? One is, there's three ways to have equity. One is to put more money down from the beginning, right? Mm-hmm. Another way is just to own it long enough that appreciation takes its place. The third way is sweat equity. So you buy a, distressed property. And so what I did on my rentals, in almost 100% of the cases, was I bought a distressed property, something that nobody else wanted. I fixed it up. I did the work. And then when I refied, I was still getting almost 100% of my money back. That's at right. Still a 70 to 75% loan to value. That means, guys, that I could liquidate that asset should things turn for the worst. I at least could get out of it, alive, right? And I think that's what a lot of people don't realize. They're saying, oh, you want to suck all the equity. I think that's the biggest injustice, because there is zero room for error or, really for any type of downturn whatsoever. So right. People are buying the houses in the BRRRR. They're taking their equity out. They're maximizing that, right? And then what happens is their tenant doesn't pay, and it takes them 7 months to get out, and they're bankrupt that right. fast. Or the heating and air system collapses on the house, and they have to put $20,000 worth of work into it, and they don't have it, right? Yeah. So now, that is what a lot of these, newbies that are coming into the marketplace, unfortunately, I think you're right, they may be clobbered. Hey, Matt, I was clobbered on my first couple deals, man. I lost money. I had here I am, a contractor, capable, competent, man. I was young. I could work 20 hours a day. I didn't need to sleep. I would, work for my clients during normal business hours. Then I would go to my investment property and work until 1, 2 o'clock in the morning, right? What happened? I didn't think about, what if the market downturns a little bit? What happens if I overspend when I open up a wall like I always do and find things? So, man, it is not for the faint at heart, as you know.
Yeah, and that's the biggest concern that I have is it's a lot of these really seasoned investors selling an advanced strategy to a newbie. I think that I agree with you. I never bought anything that was turnkey. Everything that we bought, every single time we bought something, at a minimum, we were going to spend $10,000 to $15,000 in the next 6 months doing a roof, doing a heating system, ripping out carpets. We were going to do something to that degree, or $10,000 or $15,000 worth of improvements on the property, because quite frankly, it was something that was old and tired and needed it. And so I love that value add approach. And I think that people need to recognize the value add approach is very different from the BRRRR approach. Those projects can absolutely get you. So as you're watching the market unfold, as you're seeing, based on what I could tell, it looks like transactions in your market are falling like they are everywhere else in the country. What is that one piece of advice that you would give a home buyer, not an investor, but a home buyer? What's that one piece of advice you would give a home buyer if they're shopping with you in today's market now?
Get a home inspection. That's
Yes.
number one. Number one,
Yes.
get a home inspection. Especially if you're looking at older homes, and if you're going to make it happen in this climate, I tell people that they should plan on being in the house. I mean, nobody knows unforeseen things that happen and cause you to move. And if you get a job promotion somewhere else, and hey, it doesn't matter, right? You can absorb any kind of losses, hopefully, if you should take them. But you should plan on being in the house for at least the next 7 years, preferably a 10-year move. Because I think that if we do see continued downward pressure on pricing, it will be hard if you should need to sell before it eventually goes back up. Always does. It will put you in a situation where you may have to bring money to the table, especially if you're not putting a lot of money down, and people don't have a lot of down payment.
It's true. Yeah. I mean, a lot of times we're seeing 0% with veterans, or we're seeing 3.5% with FHA. We're even seeing 5% on some conventional products. And so when you're looking at 0, 3.5, or 5%, and when you figure that normal fees all added up when you go to sell are 6%, I got bad news. You're underwater if you get exactly the same price for your house. So I think your advice is extremely sound. When I talk to people about it too, I say, if you're still just paying rent and there's not a zero cost to waiting, if you know that you're going to be in that area 7, 10, 15 years, because this is home and you're not leaving. And to Todd's point, I think it was really well put, which is maybe you get a job somewhere else, but you're getting paid for that job. You're getting a major price increase if you're going to move. I think that that's really sound advice, and quite frankly, advice that not many brokers give. They're more just like, well, you got to get on the ladder eventually. No, you have to understand, if you're buying that single family home and you're doing it right now with a 6 or a 7% rate, and you're paying the price that you're paying, you might be able to time the market, but likely it's probably costing you more to wait. So I think that's really sound advice, making sure that people recognize that, hey, we're going to be here 7 to 10 years. And we don't know, we can't be freaking out if our house goes down 10 or 20% because our payment is fixed for 30. And that's really what matters. So last thing that I would ask you to do for us is, as an investor, what's that one piece of advice that you would say to folks that are looking to invest, or even on their investment journey? What's that one piece of advice you think is relevant to you based on what you're doing with your investment properties?
Matt, I would say, and two components to that, right? So if we're talking about the flipper, right? Somebody wants to get in and they want to flip a property. My advice would be to see if you can get money from somewhere else other than the bank. If you can bring in, the way that I really started out was I found somebody that had money, right? And, that could invest and partner with you at some kind of a level. There are a lot of people that have lots of cash. If you can get an investor to come in, believe in you, maybe you keep them updated. But if you can do that and then turn it around, part of the profit and reduce your carrying costs, because it will take you longer than expected to do the flip. You will run into things that you may even need more money. So, if you don't have that bank, that hammer hitting you on the head every single day with interest, and you can pay out as part of the percentage of profit, that's the key. If you're a landlord, I'm going to tell you the best thing to do are to go after the standard sales. And what I mean by that is, a lot of people get hung up on bank-owned properties, right? They want to buy from the bank. They want to buy, first of all, banks aren't motivated. If we start to see a situation where, the repos are happening, the foreclosures, the banks are, a lot of people don't understand. For instance, if that bank has it listed for $200,000, you can't come in and offer them $150. They're not going to take it. Right. Period. The end. Just stop trying, because that person at the bank is only authorized to discount the price by a certain percentage before time elapses. Correct. So once the time elapses, then they'll come down to the next price point, right? So, you have to stay in that game for a long time. But if you're dealing with a standard sale, maybe it's an estate sale. You've got, the siblings are scattered throughout the states. There needs to be work. Nobody wants to put the work into the house. Your retail buyers are ones that they want more turnkey, more things that they can move right in. So if you look for, regular standard sale inventory that needs work, I think you'll find your best deals.
That's awesome. Todd, I really appreciate all your time. Guys, make sure you go over and check out Sachs Realty's channel. He's doing some really cool stuff. Had a recent video about landlords and rents go viral with John Williams. It was an awesome watch. Really enjoyed it. So while you're here, as you know, we always try and create great content for you. Please make sure you hit that like button. Also subscribe. And like I said, make sure you make time to go over and check out Todd on his channel. He's doing some awesome stuff. And as I always say, when we're bringing those elite folks to you, we want you to go out there and see what they're doing, because that experience cannot be replaced. Todd, thanks again for making the time for us today. Look forward to doing this again with you in the future, my friend.
Anytime, Matt. I appreciate you, man. Keep doing it. You're doing a great job, a great service. Keep it up.
Thanks. Talk soon.